Our Heavenly Father, we thank you so much for this opportunity that we get to come and learn together. Lord, you have entrusted us with everything that we have, with all of the goods, with all of the finances and the resources. And Lord, we want to be the best stewards of those things that we can be. And Lord, we ask that you continue to bless us, that we can continue to learn and grow in you each day and every moment, I pray. Bless all of those who are here on this call, Lord, and those who will be joining us as well. In Jesus' name I pray. Amen.
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 Amen. As I say, welcome for coming today to one of another seminar. Phil is traveling, so he's not going to be joining us. And today our seminar is The Good, the Bad, and the Ugly of Life Insurance. What a title. Okay, so if this allow me to go. And this is the staff, our department staff, and the email and the phone number is right there. If you need to contact us, please take a picture and call us. We are happy to help you here. And we also had the privilege to have 3 more conferences join our seminar and supporting us. And if you are from any of those conferences, please take a picture. If you need to contact your leader, we have Nicole from Georgia or Southern Tennessee, and we have Silky from Northern Tennessee or Kentucky, and we have Carlos from New Jersey conference, and Raquel is also with us. So feel free to take a picture if you need to contact them, and thank you for being with us. All of us are certified by the North American Division, and every year we are required to maintain certification. So we need to do continuing education, and every 2-3 years we are auditing. And this is just to share about what the Development and Plan Giving in Florida Conference has been doing. On the previous 3 months, we have give all these checks from the state planning to the Titusville's, to Forest Lake, Clearwater Church. And we had visited a couple of churches in the last 3 months, and we had a long list for this year. So we have been very, very busy. And Luis is going to share with us a little bit.
So here in Florida, we just made a pamphlet that says membership has its privileges, and it basically talks about everything that we offer to our members here in Florida, like free consultation, free preparation of basic estate document, free notary services, and also the consultation with an estate planning attorney. And as you see, also, we have some tools that we offer, like the documents that we do for the members, the power of attorney, healthcare surrogate. Within the will, we do the child guardianship or testamentary trust also. And we do the living will, and we work with the trust that we also offer to our members. We do not pay for trust, but we can help them to see if they need to have a trust or not. And then there's other tools like the charitable gift annuity, very popular, certain endowments, and Adele already passed it to the gift annuity. So I wanted to finish what I was saying there, but since
I cannot go back. Okay.
Gift annuity, that's okay, Adele, because I mentioned the gift annuity. Annuities are really good for those who have certain amount of money, not gaining much, and have an interest in giving or leaving a legacy to the church. And so the way it works is you donate certain amount of money to the church. The minimum is $10,000, as it says in there. And then you donate the money, so the money is not coming back to you as in that amount, but it comes to you through your life, according to your age, by the interest that you're getting out of that money. So it's a win-win situation because you're donating money to the church, you get some tax write-off, and you get the benefit of receiving money until you die. And when you do it for 2 lives, which means that you do it for your wife and or husband, you will keep receiving this amount quarterly or yearly or every 6 months for life. So for those who have money in the bank doing basically nothing and have the intent of benefiting the church, this is a good plan. We always, when someone is interested in this, we take care of looking at their finances just to see if this is something that it will be appropriate for this person. And we work with WAF to prepare these documents. So is very, very important that you get more information through us, and then you can get the benefit of this. And there's other tools that Adeli showed on the previous slide. But if you go to our website, you can take a look at that.
Thank you.
Information there.
Sounds good. So, although we are certified as a trust officers, we are not attorneys, CPAs, or licensed financial advisors. And please keep your computer mute. And also, if you have any questions, you can write it in the chat or wait to the end, and we will be able to go over the questions. And today we have the privilege again. Gene Torres is one of us, and he has over 38 years in the insurance industry, specializes in assets protection through proper planning in the areas of life insurance, health insurance, Medicare planning, long-term care, and safe money investments. He currently holds license in Florida and Tennessee, and the information is there. I know Gene is going to share the information at the end, and now is the time to learn. So go ahead, Gene. I'm going to stop sharing so you can share your presentation.
You're muted.
We cannot hear you. Look, if Gene, if you are talking, we cannot hear you.
Can you hear me now?
Yes, you got
All right. Well, I want to thank Adeli and Phil for allowing me to share some of my knowledge with you folks. I know that this is a topic that has had a lot of conversation in the past. As a matter of fact, what I want to do is I want to start out, see if I don't know why my computer is not allowing me to go to the next screen. Hold on a second here. There we go.
Okay.
So as Adeli had indicated, for those of you who don't know me, I am obviously, my name is Gene Torres. I'm for those of you who you might know my dad a lot he gets around. His name is also Gene Torres, but he's senior. He worked for the conference for many, many years and had pastored churches and
Jean,
unmute.
okay,
Okay, got it?
yes.
Yeah, I think he muted everybody. As Adele had indicated, I'm obviously licensed in the state of Florida, Alabama, Tennessee. The company that I work with is a company called American Senior Benefits, and the agency here in Orlando happens to be Florida Legacy Advisors. Been very fortunate to be working with a lot of folks regarding their life insurance, their health insurance, Medicare planning, long-term care planning, as well as safe money investments. We do have financial advisors in our office for those folks who have other needs in addition to that. My designations with regard to this industry have been more around personal lines of insurance. I've been fortunate to be selected to be an education chairman, as well as a political action committee chairman in the past for our Life Underwriters Association. And then personally, been married for 39 years and have 3 daughters and 2 grandchildren. So the topic we're going to talk about today, life insurance, has many opinions. As a matter of fact, it's often at times been misused. I'm going to lay out many of the types of life insurance, when they're appropriate, when they're not appropriate. And since everyone's situation obviously is different, I would like to make sure that everybody understands that you should have somebody who's fairly knowledgeable about the different types of insurance pertaining to life insurance, so that they can make the appropriate recommendations. Okay, so let's get right into the presentation. And I don't know why my screen is not, it's taking a while to turn.
That happened with mine, but you just need to,
Keep pushing.
yes, because,
Okay, there we go.
yeah,
So let's talk a little bit about the history of life insurance. I when I was doing this presentation, I found some pretty intriguing things with regard to life insurance and the history of life insurance. Life insurance, interestingly enough, dates way back to ancient Rome, 133 AD to be exact. There were actually burial clubs that were created as a result of someone losing a family member, and and basically helping with the cost of funeral expenses and assisting folks and their surviving family members financially. In the United States, the sale of life insurance actually life insurance companies began back in the 1700s. And one of the first insurance companies was a company called the Presbyterian Ministers Fund. They had also did something similar to what they did in Rome, where they were just simply helping assist in financially for surviving spouses and dependent children as well. And now, interestingly enough, as of 2022, there was approximately 730 life insurance companies. So yeah, there's many options with regard to life insurance. And then over half of the United States, about 54%, say they have some form of life insurance. But a lot of them tell us that they say over 70% of those tell us that they're either underinsured or don't understand what they've got. They don't understand their policy. And of course, obviously, there's 46% of those people had no life insurance. So let's just start and talk a little bit about something very basic. What is life insurance or assurance? Life insurance is a contract between an insurance owner or policy holder and an insurer or an insurance company, where the insurer promises to pay a designated beneficiary a sum of money upon the death of the person that's insured. Right? And I think most of us know that, but we wanted to at least have a starting point to talk about that. Now, depending upon the contract, other events such as terminal illness or critical illness can also trigger, prior to somebody's death, a payment as well. And of course, obviously, where the insurance companies are paying a lump sum to the beneficiaries, in return, the owner of that particular policy agrees to pay a regular premium on a monthly or yearly basis, or a lump sum. Now, I often say that life insurance also, if properly planned, it's simply a risk management strategy. Now, we say what life insurance is. Let's just kind of talk a little bit about what life insurance is not, because I think that's where we run into a challenge. We got a lot of folks that try to compare life insurance to other things. Well, first of all, life insurance is not an investment. Okay, it's simply for the purposes of somebody passing away. If there's some additional benefit with regard to a cash accumulation, that's something that's just extra. You should be purchasing, if you're purchasing a life insurance policy, you really should just purchase it for the pure amount of insurance, not to compete against an investment. It's also not for the really wealthy. Just about anybody that you can talk to is a candidate for life insurance. And then it's not for just covering funeral expenses. Okay. So let's on that same vein, let's talk a little bit more about the reasons why people buy life insurance. Okay. Well, first of all, final expenses. Now, final expenses could be a cremation, if that's what your preference is, and that could range anywhere between $3,000 to $5,000, unless you decide to do something more elaborate. Or it could be traditional, which could be anywhere between about $8,000 to give or take $20,000, give or take, depending upon, again, what you want to accomplish there. Life insurance is also purchased for a debt cleanup fund. Things like mortgages, credit cards, loans, those types of things are things that sometimes folks don't want to leave behind for their family members, and it certainly solves a purpose or fills a purpose in terms of a debt cleanup fund. Also, reasons why people will buy life insurance: when somebody passes away, many times there's also some emergency that comes up, and they just need some additional funds for that, as well as if they have a dependent child or a handicapped child, obviously in making sure that if they were not there, that they would be able to fulfill what their wishes were, because obviously the funds that are needed to continually support that person are going to certainly need to be there for the length of that person's life. Very, very important. Also, something that was talked about right at the beginning of this, before I started talking, is legacy and gifting. Many folks may not have a lump sum to give to either a church or a charity, and therefore, but they do have possibly a little bit of money that they can set aside on a monthly basis, and that certainly is all around gifting. And a lot of times, reasons why people will buy life insurance is simply to provide or give more than what they're able to give otherwise. There's another reason is to take care of taxes. If you have a family member that passes away and you inherit an IRA, for example, what you simply created was an increase in your income, and therefore you'll be at a higher tax bracket. And sometimes family members that have the IRA before they pass away might want to create a fund that allows them to pay the taxes. In addition to that, estate taxes. This comes into play when somebody's assets are over a little shy of $14 million per individual. very specific, but there are some folks that have that kind of money, and those are folks that would be a perfect opportunity to discuss how to reduce the expenses related to estate taxes. Another reason why somebody will buy life insurance is simply to replace an income. As we all know, when two people are living, you generally have two incomes. The only problem is that when one passes, part of that income is going to pass as well. Life insurance can provide either a temporary solution to that for an adjustment period, or possibly a permanent solution to replacement of income. If you have a business, people will purchase life insurance for what they call as buy-sell agreements to make sure that the business continues in doing what they want to do, rather than having to sell certain properties and whatnot to pay off the family. So buy-sell agreements, very, very important a factor in business continuation, and life insurance certainly can solve that problem, as well as key man insurance. Another reason why somebody will buy life insurance is for the living benefit. There's long-term care programs now that people can purchase that will pay for long-term care, which when I refer to long-term care, it's simply hands-on or standby assistance given to someone with either a chronic illness, some type of disability, or even a cognitive impairment. Long-term care services certainly are where people are cared for would be places like nursing homes, home health, adult daycare, assisted living. And as we all know, that does cost. So there are life insurance programs that can provide a living benefit instead of a death benefit. And also for future college, if for some reason there's a premature death and you wanted a child to go to college, it's just simply to fulfill that wish, and life insurance, people will purchase life insurance for that, as well as simply just peace of mind. Okay, I've got a little video on this next slide. Hopefully it'll work, but it'll probably push us out, but we'll get right back in.
We cannot hear Jean.
Oh,
we see it, but we cannot hear.
Oh no.
Yes, because when you share a video in...
Hang on. When I share a video, it doesn't allow the video,
It allows, but you need to share it in a certain way. So let me see. When you are going to share it, you need to select where it say video and voice. I think so.
Okay.
Mm-hmm.
Okay.
Stop sharing.
Yes.
Stop
now.
sharing.
Yes. Now.
And then reshare again and select share audio.
Okay. So stop sharing.
Mm-hmm.
Okay. Okay. Did that
again.
Okay. Did that. Okay. And then what do we do?
When you do sharing again, make sure that you select share audio. There's a little option before you hit share.
Yes.
So
At
hit
the top?
share.
On the bottom in the
Yes.
corner.
At the top of the video.
In the
At the top of the video. I don't see
Yeah.
that.
So
See that. Click on it.
did you hit share
Click on
again?
it.
Hit share.
Okay. Share screen. Share screen.
And then look at the screen. It should have a little checkbox that says share audio.
Hang on. Share sound. Okay, there we go. Okay, so now share. Okay.
Audio.
All right, let's try this again.
Yes.
Participants now can see your application. So let's see if we can do that.
Mm-hmm.
What happened? Oh,
Tom and I were done.
I got it. Can you hear now?
He was the planner.
We can hear, but the video is not
We brought up the
rolling.
best in each other. Shortly
Oh.
after Tom and I were married, he brought up the topic of life insurance. Tom would always say to me, we need to plan for our future and we don't know what could happen. He was such a wonderful partner and
It's not
a
working?
great father.
Well, we can
He
listen.
loved the outdoors.
Okay.
Every year, Tom would go on an annual snowmobile trip
So
with
sorry.
his friends and
It's
colleagues.
okay.
Tom called me while he was on his trip. I didn't know at the time that that would be the last time that I would ever speak to him. Tom had been in an accident and had passed away. It was the worst moment of my life. I couldn't imagine a world without Tom. People who don't think life insurance is important, I get it because I used to be one of those people. If Tom didn't have life insurance, I don't know how I would have paid my mortgage. I don't know how I would have gotten groceries for the kids.
After Tom's death, Jeannie was quite worried about money and just security in general, and the life insurance not only provided the benefits for her to stay home and take care of her family financially, it also gave her peace of mind to even sleep well at night. Tom made sure that there was life insurance for the family in case anything would happen to him, that Jeannie and the kids would always be secure.
Because of Tom's life insurance, the kids and I are doing really well. It's been a long journey, but we've made new memories. And more than anything, the three of us know we are okay. We're not just surviving anymore, we're thriving.
Okay. Let's see, let's get back to the presentation. All right, so obviously the video, apologize for the video not being able to be seen, but I think it kind of drives home the message and the necessity for life insurance. And again, depending upon the necessity, everyone has different situations. Certainly, you know, we want to make sure that it's the right type of life insurance. Now, one thing that we want to make sure of is there's certain factors that we want to consider when you're evaluating some life insurance. For example, how much life insurance you need, and that has a lot to do with what it is that you want to fulfill and what you want to continue in terms of continuation for your life, and making sure that that you know that if you happen to not be there, that's something that's taken care of. Another thing is the types of policies and customizing the policies, whether it's a waiver of premium, whether it's accidental death, whether it's children's riders, spousal riders, guaranteed insurability, et cetera. There's a variety of things that you can do in there. The cost of the insurance is certainly another thing to take into consideration. And then what's probably also more important is the underwriting, because there's a lot of factors that insurance take into consideration, and that is the age of the person, the current health, their medical history, the occupation that they're in, their gender, obviously lifestyle, policy type, you know, in other words, as far as what they would like to have, and the reasons why they purchased the insurance and the amount of coverage. Now, when we talk about different types of life insurance, many of you have heard about life insurance, and have heard that one of the types of life insurance is term insurance. So let's kind of talk a little bit about what that means. Term insurance is simply just that. It's for a specific period of time to cover somebody, whether it's 1 year term or whether it's a 40-year term. That's for a specific period of time. One of the advantages towards that, or reasons why people will do it, is because it's great for debt payoff, or if there's a premature death, or if it's a young family that doesn't have the funds but needs a lot of life insurance. A perfect opportunity there during the rearing years of the children. It puts you in a position where, at least if you were not there, that it could fulfill, just as the video it talked about, could fulfill what you want to happen. So some of the disadvantages, if you will, or the reasons that wouldn't work as well, is it just simply is just for a term. So it's not, if it's needed for a longer period of time, then it's obviously, you know, after that term, it's just not, if it's not good, if it's needed for that period of time. Okay. Another type of life insurance that you see is the group insurance. And group insurance is just simply that. It's term insurance that's provided by an employer, sometimes a percentage of income. The advantages to that would simply be that it's generally less cost and shared with employer. The premiums are very reasonable, and there's very little to no underwriting. So most people can get those policies without having to worry about qualifying for them. One of the cons, if you will, is that if you work at a company, as long as you're with the company, you can be provided the insurance, but generally they're not portable. I always recommend that that you get something that is yours, that someone cannot take from you, because the challenge is if you work for a company for 20, 30 years and you decide that you want to retire or leave that company, you're not only older, but you're also possibly may have some health conditions that will preclude you from getting insurance. So a good idea, if you're in the market for that, to do it, the younger you are, the better. Even if you have group insurance. But I've talked to a lot of people, they say, well, I have insurance, but if they have it at work, it's simply not portable and it won't go with you. Okay. So obviously we talked about the term insurance types. Now we're talking a little bit about the permanent insurance. With permanent insurance, it comes in a couple different fashions. The first is the final expense term insurance, or final expense permanent insurance. This is typically $50,000 or less. Generally, the reasons why people will purchase this is just that, just for some of the final expenses that are associated with somebody passing. The first one is simply a simplified issue where it has a number of questions to qualify. The pay periods are typically a 10-year pay, a 20-year pay, or sometimes lifetime pay. The advantage, if you will, with that versus a policy that's more than $50,000 is that typically those are ones that pay out a lot quicker, where you can go to a funeral home and basically you contact the insurance company, and as long as it's verified that the person passes away, that insurance company will send a check fairly quickly. When we're talking about insurance more than $50,000, insurance companies typically take a little bit longer to release those funds. So therefore, that's why final expense sometimes will be appropriate. Other final expense programs are the graded or modified whole life. And what I mean by that is that they are substandard programs. They have a few health questions, but for the most part, if you pass their health questions, it will cover you. But in the first couple years, it will pay a percentage of the death benefit. For example, most common is 30% first year, 70% second year, and then 100% thereafter, unless it was due to an accident. Okay. And then you've got a third kind of final expense, which is called guaranteed issue. And guaranteed issue is, for lack of better terms, if you can essentially fog a mirror, you can get this type of insurance. And the only thing is that there's a drawback to it, where if death occurs from natural causes in the first 2 years, other than an accident, what the companies say, because these guaranteed issue contracts are there, you can have active cancer, they're going to pay the premium or the amount that you paid in typically the first 2 years, plus an interest rate. So it works similar to a savings account. One of the companies that comes to mind, not to pick on a company, but it's a company called Colonial Penn. This is one that you hear on television. And people, I've heard people say, well, I can buy life insurance for $9.95. The only thing is that they won't pay out, obviously, first of all, unless you had it longer than 2 years. And the $9.95, as you can see on my screen, it's per unit. So basically, a male 65 years of age can get about $900 worth of insurance for $995. Okay. So again, just want to make sure that people are aware of what they're looking at, and you know, when you hear it on television, understand what they're talking about when they're talking about guaranteed issue policies. So again, very helpful there. And then we've got the whole life context. Now, really interestingly enough, there was up until I'd say the early 80s, all there was either whole life or term insurance. So the whole life, it's generally $50,000 or more. This is a plan that basically guarantees a premium, guarantees a face value, also guarantees a cash value, so that you can actually take a look at a schedule and see exactly how much cash value you'll have in a 20-year time frame. Again, appropriate for people that just simply want to make sure that that they have complete guarantees and guaranteed back by a contract. There's other types of whole life, which is your single premium whole life, and that's payable with a one lump sum that provides an immediate death benefit in exchange for the lump sum. Example: if you had a 65-year-old female, can put a lump sum of $10,000 into these particular programs and immediately have an $18,000 death benefit. Okay, again, there's going to be some health issues that we have to look at before that takes place, but it's a good fit for somebody who has set aside those funds for a family member and wants to make sure that those funds go to them. It could just simply allow them to have a larger amount that they provide for that family member. And other types would be first to die programs. First to die programs are just simply insuring 2 lives, and it's generally for income replacement because we don't know which of the 2 are going to pass first. What I generally find with these policies is that they're less expensive than buying 2 separate policies if the intent is for income replacement. The second to die policies are ones that are more for the wealthier folks that have income or assets in excess of it's 13.61 million for individual, 27.22 for a couple. Anything over that amount, the IRS, or should I say the government, says that you have to pay an estate tax over that amount. And again, those are where it would be appropriate to use a second to die, because that's when the estate taxes would be due. And then, as I indicated, that up until the early 80s, that was really the only 2 types of policies you can get. In the early 80s, they came out with a new concept called universal life insurance. And universal life insurance, that's the one that I feel is the most misunderstood, because there's a lot of moving parts and components to it. It essentially is a hybrid policy where basically it's a term policy on a whole life chassis. So internally, the contract itself has a term rate. So let's say, for example, you pay $100 a month. Well, the internal cost of the insurance might be $25, $30 initially, but because of the fact that the term insurance cost is increasing inside the policy, it takes more and more of the $100 over the course of time, and at the same time, it provides an opportunity to have a bucket or a cash value that can be dipped into to make sure that the premiums could potentially stay level. Again, not for everybody, but certainly something that have been a good planning tool for some folks. Different types of universal life insurance. One of them could be the guaranteed universal life, where we can simply solve for a particular premium if we know the amount of insurance that's needed and the amount of time that they want to make sure that that's guaranteed for. Obviously, giving someone a guaranteed death benefit to that time frame and not have to worry about having those premiums increase. And then you got some flexible options where there's the traditional universal life, which is a fixed universal life. It's a flexible premium that is tied to an interest rate. There's your index universal life that's either tied to an index like an S&P 500 or an interest rate. And then you've got your variable life insurance, which is tied to either the market, an index, or an interest rate. Again, somewhat complicated, but again, other types of insurance, and there's certainly purposes for those types of insurances. Again, not for everybody. Okay.
Can I ask a question, or is that for the end?
Sure.
Could you go back one slide?
Yeah.
So for the index universal and the variable universal, does the policyholder has the option to choose the stocks that will be in the, in the portfolio, or
well, it's not
limited?
It is limited because the companies will provide you a menu of things and buckets basically that you can choose, and within whatever the company gives you, you have options of choosing those, but not just anything outside of that.
So the difference between having an index or a variable versus investing on the stock market alone is that you are guaranteed a percentage, opposed to the stock market, you might lose everything. Is that correct?
In the variable one, it depends on where your funds are placed, but you are somewhat correct in the fact that there are guaranteed interest rates. Again, the purpose here is not to compete against an investment. The purpose is to maintain the policy in the event that the premiums that you're paying internally increase to the point where the cost of the insurance, or the amount that you're paying, is supplemented by a portion of the cash value so that it stays level.
Got it. Thank you so much.
Yeah, no problem. Again, somewhat complicated, but I'm kind of going over high level here, so I appreciate the question. The other type of insurance that you've heard, and I really don't believe this is really life insurance, but I wanted to bring it out only because I've seen a lot of it. Sometimes banks will offer this. This is accidental death insurance. Again, accidental death insurance is just simply that. Accidental death pays a death benefit if your cause of death fits the definition of the accident established by the insurance company. If you die of natural causes or a disease, those are ones that won't pay out. And just got to look and see at the front of the contract exactly what it is, because you don't want to have something that you think is going to pay out when in fact it won't pay out only in certain instances. Okay, so when we talk about the different types of insurance, I guess term insurance, easiest way for me to explain term insurance is simply it's like renting insurance. When you rent, obviously you've got protection, but at the end of that rent, sometimes the rent increases, right? Versus buying, which is where you build equity, and over time it becomes more and more valuable to you. So let's talk about the advantages of purchasing term insurance. Well, first of all, it's initially less expensive than whole life insurance. Okay. And it's basically, you can set the terms where you can have it for a 5-year increment, a 10-year increment, a 15, or even a 20-year increment. So it's easy to plan for short-term commitments without a lifelong commitment, if you will. You can usually convert some of the term insurance before the term period ends to permanent insurance to lock in the rate. The advantage to that is that you no longer have to go through underwriting, because the insurance company is accepting the same risk, whether it was through term or whole life. They're going to pay the same amount. Now, it depends on the age that you are as to when you do it, and and the type of program that you do in terms of permanent insurance. But once again, it allows you to convert it into permanent insurance. Most contracts will have a conversion privilege. And of course, another advantage if it's properly structured is a tax-free death benefit, where there's no taxes that are due as long as it's structured properly. Some of the disadvantages to life insurance, term life insurance, is by nature, it's temporary. So you can't plan for the unexpected crisis beyond that particular term. Premiums are going to increase as you renew. And coverage can get quite expensive over time because they simply, when it does renew, it's at a higher age and, of course, a higher cost. And also, it just simply lacks some flexibility. The risk of lapsing if you miss a premium are there, so you got to make sure that the premiums are paid and they're kept up to date, or the possibility of lapsing a policy, which sometimes can be a disadvantage for term insurance. Okay, now the advantage towards permanent insurance is that the coverage lasts your whole life. Okay, so your family's financial future can remain secure. That's an advantage. You can build equity or cash value. Again, if you're purchasing it for that purpose, there's investments can do a lot better with just that same dollar. So it's just a byproduct of the life insurance. You should be purchasing life insurance for the face value and the cost of it, and the things that it's going to do for you, not for the cash value. But the cash value can be used for what I refer to as non-forfeiture provisions, which is where you can use it to either pay up a policy, you can use it to extend the policy longer than that period. You can take loans out, just like an equity in a house. You can take loans out, or you can simply cash in. Okay, it is definitely a long-term financial plan, and again, just like the term insurance, if properly structured, it can be a tax-free death benefit as well. Okay. Some of the disadvantages towards permanent insurance is that, well, it's generally more expensive initially. Okay, now over time, over a lifetime, I would say that it would actually catch up, because once that term again is over, the cost of insurance increases, and it increases quite rapidly. But typically, again, a disadvantage towards permanent insurance is that it's going to cost more than a term policy initially. For universal life insurance, because of the fact that you have to make sure that cash value doesn't go negative, you have a potential of having a policy lapse if that cash value goes negative, or if it's just not funded properly. So we want to make sure that it's funded properly, and talk to somebody, if you're going to be talking about getting universal life, that knows what they're talking about, how to plan that. Also, you can, if you're going to be drawing money out, the cash value could potentially reduce the death benefit, just like an equity in a home. If you decided to take equity out of your home and loan it, well, that's you know that you're going to owe that back to the bank. Again, very similar situation. And as I talked about just a second ago, permanent insurance and these contracts are simply, as a disadvantage, they're a little more complex than a traditional term insurance. Okay, so let's see. There we go. Now, any questions?
Okay, now is the time for questions.
Do you find advantage to have kids have policy, knowing that they're super healthy, then they might collect in life later on, or is better to invest in other things for kids?
Well, obviously, with kids, I would say this: we know that we would hope and knock on wood that they're always going to be healthy, but the younger they are, if you secure it, we know that if their health did change, they get to keep that. If their health changed for some reason, they wouldn't be able to get the insurance in the future. So I personally, on my kids and my grandkids, I have a life insurance, and I'm hoping that never have to use it. But I do know that there's an expense associated with somebody passing, and that's the reason why I do that.
So do you do term for them or you do a different one?
I personally, I put a program in place that was more permanent because at that age, at a young age, there's not a big significance in relation to pricing, but you lock in the rate so that at 50, 75 years of age, they're paying the rate that they would if they were when you took it out. Good question.
Okay, any other questions? I don't see question in the chats.
I had one question. Jean, I know your
Yeah.
dad really well, and please send him my regards. This is
I will do that.
Look
I think he's listening to you.
Oh, is he? Awesome, good.
He might be.
We've always been taught that life insurance passes directly to the beneficiaries that it's designated to. But
Yes.
I have now, and so therefore it wouldn't go through the probate estate.
Right.
And, but I have experienced now in the past that where a person had designated a beneficiary but the person was on Medicaid for a long time in nursing home and
Mm.
it ended up being pulled into the Medicaid recovery. Have you heard anything about that?
I unfortunately have, because what you've done, and of course, essentially the beneficiary, you essentially have made an owner, put them as the owner when somebody passes. So yeah, it's going to be part of their estate. That's in those instances, there's obviously, I'm not an attorney, but I would say a trust could own that, and it might work out a little bit better than just the person, if in terms of beneficiary.
So with other words, the trust, the beneficiary would be a trust, and then the trust designates who gets the money.
Yeah, I mean, there's some instructions within a trust that would then instruct what needs to happen with those funds and whatnot, because a trust is an entity that can own stuff.
Yeah. Okay, thank you.
Yep. Good question.
We had a question on the chat.
Okay.
And Silke, can you read the question, please? If you help me. Okay. It's okay.
Oh yeah, here it is. If you borrow from the policy, do some just deduct it from the death benefit? I heard some life insurance you don't have to pay back.
Well, if you do borrow, it basically will deduct from, I guess, think of it like when you're buying a house. When you buy a house and you pay the payments over time, you build equity in that house, so you own more and more of it. Same thing with a life insurance policy. If you borrow against the equity in a home, well, you're going to have to pay that loan plus that when you sell it, it's going to be less. You're going to receive less because you owe somebody less, or you owe somebody some funds, so it's going to be less money. But it does reduce the death benefit. Yes, it does.
Okay, thank you. Let me see. I don't see any other questions.
So I
Okay.
have a question.
Yeah.
Go ahead.
Once you are diagnosed with cancer and you are cured, how long do you have to wait until you're able to look into policies? I know
Yeah.
for cancer, it's kind of,
It is.
you don't have.
Yeah, it's kind of a fuzzy thing. We would have to know where the cancer was, how it was treated. But for the most part, most cancers, you know, that have been treated and you're no longer under a doctor's care, typically about at least 2 or more years that you'd have to be free of cancer. Some of them they won't. Some companies won't allow it. Just depends on the company as well.
Yeah, I used to have term because I got term on my 20s. So I used to pay $39 for a period of 10 years.
Yeah.
And then the automatic renewal was $175 with no proof of insurability. I took it because I had cancer, so I wouldn't be eligible to anything.
Yeah.
Because I thought it was 5 years, but you're saying there are some companies that might consider 3 or 2, you said?
Some of them will. It depends on where the cancer is located. Obviously, if you'd like to talk offline, because obviously you don't want to talk about your personal situation, my contact info is there, either an email or phone number. We can just kind of talk offline, and I'd have to get into a little more details to make a determination exactly how to answer your question.
There is another question about a whole life insurance. So if you want, let me wrap in my end, and then you can continue answering the question. So if you can stop sharing, and then I finish.
Okay, well, I'll tell you, I got one more. I just want one more quick slide. Okay. I say this: no amount of planning can bring a loved one back. Okay, one of my mentors told me that life insurance, in terms of definitions, is simply just a piece of paper until it's baptized by the tears of a widow or a widower, and then it becomes a love letter. And it's really all about proper planning. Okay, so thank you.
Thank you. Okay, so let me
stop sharing.
Okay.
All right.
Okay, so thank you, Jean, for great presentation. Thank you, everybody. We have future Zoom's webinars. Please take a picture of this slide. And in May 14, we are going to have a seminar that I invite everybody to be part of this, render and to Caesar by no more than required. And this is about tax advantage investment options, which everybody should be interested in this. And we had a couple of more. And with that, if this is our contact information, if you need it, please take a picture or scan the barcode. And if you want, Jean, you can put back your information so they can have it. And then now, if anybody needs to go, we want to be respectful of your time. You can leave. Thank you for being part today of our webinar. But anybody that wants to stay, I know Jean will love to answer a few more questions.
Sure, sure. Would you like for me to share my screen again?
Yes, you can do, so you can share your information.
Let's see, cannot share while other participants. Oh, you're sharing, so I have to wait until you're not sharing anymore.
I'm going to stop.
Okay. Hope you feel better, Adeli.
Thank you. Okay, so yes, now the question, it was about the whole, let me see if I can read it back to you. Please address using whole life policy to pay for long-term care.
Okay. So there are, and this is a fairly new development. I say new, probably in the last maybe 10 years. There's a few insurance companies that have offered products that will either pay a death benefit let's just assume it's that you purchase a plan and it's going to pay $100,000. If you pass away, it could be used for that. Or if you have to go to a nursing home, instead of it paying a death benefit, it would pay an amount towards long-term care.
Okay.
So there's triggers. There's like either a cognitive impairment or a functional incapacity with at least 2 ADLs or activities of daily living that would trigger a policy. But again, it's a specific policy, and those are ones that are becoming more and more popular. So I don't know exactly what kind of questions you're looking for me to answer, but you know, there's certainly a viable option with regard to long-term care for some people.
Okay, any other question? Okay, well,
Yes, I have a question.
go
Okay.
ahead.
When is a good time to start thinking about like maybe like what type of insurance guarantees like a nursing home, you know? So when is a good time to maybe start investing on an insurance like that?
Well, the quick answer would be as soon as you're able, because the thing is that these programs are set. They have a lot to do with health and age of the person. So the older you are, the more it's going to cost. So today is the youngest you'll ever be.
Oh, wow.
Yeah.
That will be separate, right? Like if you have term or whole, whatever you have, this would be the long-term care, right? Insurance.
Yes. And again, long-term care could be purchased, and that's a whole nother day, but a whole long-term care could be purchased as an indemnity based where it pays so much a day, or it could be an asset based, which could be through a life insurance contract.
So through term can be that extended, or the term needs to end to add that into it?
Well, the most of the most of the long-term care plans are part of a permanent program, only because they want to make sure that that you're covered through your life. I haven't seen very many, or I haven't seen any term insurance policies that have a long-term care. They have some what they call as accelerated death benefit. So that if you have a terminal illness, they'll pay a certain amount, but not necessarily just for long-term care.
So it will have to change term to either whole or different one in order to add the long-term care in it.
Yeah, we probably there's a couple other factors involved in that, but you certainly need to look at one that does have that option. Yes.
Okay.
Great question.
Okay, there is another one. How does selling whole life insurance work as far as amount that one can sell it for? Supposing a 100,000 at 70 years old with no terminal illness.
I'm not sure what they're asking.
Yeah. Okay, if you want, just say the question because it's not clear. How does selling whole life insurance work as far as amount that one can sell it for? Supposing 100,000 at 70 years old with no terminal illness.
Are they looking at what it would cost?
I don't know.
Yeah, I apologize.
Carol, she asked this question. Can you clarify your question, Carol?
Is she still there?
Yeah, I think she is still there, but I don't know.
I think what she's asking is like, how does it work when you want to sell your policy?
Oh,
at 7 years old. That's what I understood.
oh, selling your policy. That's probably
Right.
what that's referred to in it's called a viatical, and that's going to be completely different. That's a completely different topic than this.
Okay.
Yeah.
Okay, well, it is 7:05. We went over 5 minutes. Jean, we want to respect your time too. And
Sure.
we appreciate sharing your knowledge. Thank you, everybody, for being today. And we will see you next time. Have a
All
good
right.
evening.
Thank you. Thank you, Adele.
Hey,
Yeah.
Jean, how do I contact you? Via email?
Yes, email would be either email or phone. Matter of fact, I don't know why my screen is not going back to the other side, but let me see if I can change that. Why is it? It kind of locks up.
Well, okay. If you are not able, then probably I can share my screen then. And I
With
have
my info? Okay. Let
yes,
me go
with
ahead.
your information.
Okay.
So let me go here. And then I have your information here. Okay.
Got it? Yeah, there you go. There's my email address and my phone number. Oops.
I don't know what happened. Okay. Can you see it?
There you go. I can see it.
Okay. So phone number is 352-804-2470. And his email is gtorres@asb.insure.
Yes.
Okay. And if you have any additional question, you have our email. You can always send us an email and we will be happy to share the information for Jean. So again, thank you for your time. Have a wonderful evening. And thank you, Jean, and have a good night, everybody.
All right. Take care, all. All right.
Okay. Bye.
Hey, bye.
Bye-bye.
Thank you so
Thank
much.
you.
Bye-bye.
Yeah.